Welcome to Deloitte's Debrief Tax webcast series in Asia Pacific. Our webcast today is from our indirect tax series and is titled Ready for the EU Carbon Border Adjustment Mechanism. My name is Dolly Zhang, and I am a tax partner based in Deloitte, China. I have the pleasure to hosting today's webcast. I have two speakers with me today, Dan De Viller and Li Qingao. Dan and Li Qing are tax partners. They are based in Deloitte, Belgium and Deloitte, China, respectively. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I would like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related question, you can submit at any time in the Q&A box at the bottom right of the screen. We will do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download
Our apologies, it seems that we are facing a technical issue and colleagues Dolly and Likun have just dropped from the presentation, but we will try to get it fixed and be back with you as soon as possible. And while we are waiting for them to join, please do allow me to already take you through the agenda for today. We have a quite intensive agenda prepared for you, as indeed CBAM is a quite extensive and important topic for those companies also in the Asia Pacific region who are affected from the new legislation, which is effectively issued and active today as we speak in the European Union. We will start with setting the scene a bit on what is CBAM actually and what is its origin. So where did it come from and why did the EU legislators choose to implement such a system? Then obviously we will have some insights on how the Asia Pacific region and companies, traders and manufacturers alike within the region will be either directly or indirectly impacted by the CBAM legislation, because in that sense you could say that this is a legislation with some extraterritorial effect. So not only EU companies will be impacted here, definitely as we anticipated, also other companies dealing with the EU will have their part of the impact. So that is what we will highlight here. After that, we will do a bit more of a deep dive into what CBAM actually means, what it stands for, and what the implications of CBAM will be. We will see that there is a phased introduction whereby the obligations for subjected parties become more and more stringent, and also the costs of CBAM will become higher over time, but more to come. We will also have a look at the operational impact of CBAM. So yes, there will be a financial impact. Obviously, there will be a legal impact, but also the operations of the different companies involved in the ecosystem, trading subjected commodities with EU, will need to be revised, and probably extended operational aspects will need to be taken into consideration. Last but not least, we already at Deloitte, both our colleagues in Asia Pacific and also our dedicated teams in the EU, have already in the meantime quite some experience and expertise on the subject. We have been closely monitoring the legislative developments mainly taking place over the past year, and we are also helping our clients as we speak. So here we will conclude with some considerations on what the typical help is that Deloitte can offer on the subject. And last but not least, we will conclude with a number of questions and answers. So any question you would have throughout the presentation, please use the chat function to raise your question, and we will be happy to take some of those questions towards the end of the hour. But I see in the meantime, my colleagues, Dolly and Likin, are back in the call. So Dolly, I kindly hand over to you again.
Sure. Thank you, Dan. So I think you've already seen our EU experts. So as we are saying, today we will leave the floor to our experts to sharing what a CBAM means, how it would impact the APAC business, and how business can take various steps in order to cope with this development. So next, I will pass the floor to Li Qun to provide an overview on CBAM.
Thank you very much, Dolly. Let's now take a look at how CBAM has been implemented in the European Union. The Carbon Border Adjustment Mechanism, which is usually referred to CBAM, is actually part of the measures to implement the European Green Deal. In 2019, the European Commission introduced a new growth strategy known as the European Green Deal. This strategy aims to transform the European Union into a modern, competitive, and resource-efficient economy with no net emissions of greenhouse gases by 2050, while decoupling economic growth from resource use. The European Green Deal aligns with the Paris Agreement's goal to limit the global average temperature increase to 1.5 degrees centigrade above the pre-industrial levels. The European Union has implemented ambitious climate policies since 2003. It has established the EU emissions trading system, EU ETS, to regulate greenhouse gas emissions. Under EU ETS, participants are required to monitor and report their emissions and surrender sufficient emission allowances to cover their reported emissions in each year. Emission allowances can be traded to enable abatement to occur where it is most cost-effective to do, thereby lowering the overall cost of tackling climate change. While the EU has reduced its domestic emissions, emissions embedded in imports have been increasing. As a result, the problem of carbon leakage has become more and more serious. Businesses in some sectors, especially those energy-intensive sectors, they have been relocating their production to countries with less stringent climate policies, potentially increasing the global emissions. CBAM aims to mitigate carbon leakage. With CBAM, imported goods and EU manufactured goods should be paying similar carbon prices and bear similar carbon cost. In addition, CBAM should also promote decarbonization in third countries. The aim is to encourage third countries to strengthen their carbon pricing system, to avoid CBAM levies and foster global carbon pricing cooperation. Next slide, please. The CBAM rules were proposed in July 2021 and approved by the EU Parliament in June 2022. On May 17th this year, the CBAM rules were adopted by the EU Commission. The detailed implementation draft guidance was announced for public consultation in June this year and finally adopted on August 17th. A transition period will begin on October. It has already begun on October 2023 and run until the end of 2025. During this period, traders will only need to report emissions without paying actual financial adjustments. This allows business to prepare for CBAM starting from January 1st, 2026. Importers will then declare the quantity of goods imported into the EU and their embedded emissions. Subsequently, they will need to surrender the corresponding number of CBAM certificates. Non-compliance with these obligations will result in penalties. With that overview of CBAM implementations in the EU, I'll now pass it back to Dolly, who will take us through our first polling question.
Thank you, Li Qing. So for the background introduction, that brings us to the first polling question. And the question is, has your organization mapped if and how CBAM would impact on your operations? And you have several options, including yes, we are ready. Yes, but we need to do more work. No, we have general awareness, but not a proper impact. No, we are only starting to explore, or don't know, not applicable. And please know that you will select one answer only. So while the audience are taking the time for the polling question, I have a question to Li Qing. Li Qing, we do understand the CBAM will be fully implemented in 2026, and the first batch of industry will include iron, steel, electricity, aluminum, fertilizer, and also cement. And it is reported that the scope and inclusion will be gradually expanded in the subsequent period. So is there any anticipation on the industry that will be included in the subsequent period or be gradually included?
Yes, Dolly. The CBAM regulation provides that the product scope will be reviewed by the end of the transitional period to assess whether it is feasible to include other goods which are already covered by EU ETS and susceptible to carbon leakage. For example, certain downstream products and those identified as suitable candidates during the negotiations of the CBAM rules. The possible extensions may cover products such as glass fibers, ceramic products, paper, organic chemicals, and polymers, and products which contain a significant part of at least one of the product objects of CBAM.
And thank you, Li Qing, for the insights. So now let's take a look at the result. Okay, I think from the audience, for now, it's about 20 people, like audience, are aware or are figuring out about the CBAM implications. But yet, I think there are more than 40% of the audience are only have general awareness or not started to explore yet. So today's session will be a good starting point for you to understand more. So Li Qing, I will pass that back to you to provide more inputs.
Thank you, Dolly. In this section, we can take a look at the impact of CBAM on businesses in Asia Pacific. the very beginning analysis a business needs to perform about CBAM is whether its products are impacted by CBAM. CBAM targets imported products for specific sectors that are within the scope of EU ETS and those the most at risk of carbon leakage. As Dolly mentioned just now, they include cement, iron and steel, aluminum, fertilizer, hydrogen, and electricity. It also includes certain precursors and downstream products of these sectors. The CN classification system is used to identify the goods in the scope of CBAM. There is a full list of covered products in the Annex 1 to the CBAM regulation. You can check and compare the CN codes of your products against this list. The list also specifies the greenhouse gases relevant for each CBAM product. If you are exporting CBAM goods to customers in the European Union member states, then you are impacted by CBAM. Your products may also be purchased by clients who themselves manufacture CBAM goods, while your products may serve as the precursors for their CBAM products, which will be exported to the EU countries. Also, it's possible that you sell your products to traders who will then sell them to EU customers, and your products fall under the CBAM. In all these cases, the CBAM goods you produce end up being imported into the EU. Then at a certain point, the EU importer will contact you to gather information on the embedded emissions of these CBAM products. CBAM requires importers to declare the embedded emissions in the goods they import and surrender a corresponding number of CBAM certificates. The ultimate price of these certificates will depend on the weekly average auction price of EU ETS allowances. Next slide, please. The OECD predicts that a carbon price of $147 will be necessary by 2030 to meet the Paris Agreement requirements, which aims for a net zero world by 2050. In Asia Pacific, we also have various mechanisms in place, including carbon taxes, emission trading systems, and cap and trade systems, which limits overall emissions monitored by companies. However, the carbon prices in Asia Pacific are much lower than that in the European Union. In Asia Pacific, New Zealand established ETS in 2008, and the carbon price in New Zealand is expected to reach $30 per ton by 2026. Korea started ETS in 2015, and the Korean ETS covers 4/3 of the total carbon emission in the country. The carbon tax was first introduced in Singapore in 2019 at the price of at the rate of 5 Singapore dollars per ton of greenhouse gas emission. The carbon tax in Singapore will be increased to 25 Singapore dollars per ton in 2024 and 2025, and 45 Singapore dollars per ton in 2026 and 2027. Beyond 2027, the Singapore government is looking to increase the carbon tax further to reach 50 Singapore dollars to 80 Singapore dollars per ton by 2030. From 2024, the Singapore government will allow businesses to use high-quality international carbon credits to offset up to 5% of their taxable emissions in lieu of paying carbon tax. China started its carbon trading in 2017 and opened the first national carbon emission market in 2021. Over 2,000 electricity companies in China are trading in this national market, while the other companies can participate in carbon emission trading in local carbon trading markets. The average carbon price in China is about $10 per ton. Indonesia started its ETS pilot program in 2021 for electricity sector. Malaysia and Vietnam have issued policy documents about ETS. ETS in Japan has started on voluntary basis earlier this year and is expected to fully operate by 2026 and 2027. Japan is also proposing a carbon tax to be implemented by 2028. So as you can see, there is a gap between the current carbon prices in Asia Pacific and that in the European Union. And you can see that the trend of carbon price increase is obvious. Next slide, please. In the list of CBAM goods, two sectors are the most relevant to businesses in Asia Pacific, namely iron and steel and aluminium. Let's take a closer look at the potential cost of CBAM for these two sectors. In this page, we listed the carbon intensity of different countries who export steel to the EU market. As you can see from the chart, India and China represent the highest carbon intensity, which means the CBAM cost for imports from these countries are to be the highest. Next slide, please. Similar to steel products, in the aluminium sector, India and China also show the highest carbon footprint and potential CBAM cost. Other Asia Pacific countries also represent high carbon intensity. Although in the transitional period, there is no financial obligation, CBAM certificates will become a real cost for EU importers from 2026, and this will put the Asia Pacific manufacturers at a less competitive position. And now we understand the potential impact of CBAM to Asia Pacific businesses. Let me pass it to our expert from EU to take you through the technical implications of CBAM. Dan, I'll pass the floor to you.
Yes, thank you, Nikin. Thank you very much. Yes, and very interesting insights. Thank you for sharing those. Also on in the long term, of course, financial implications. Because if I may begin on that, we see, and people have also been able to see that on the slides, the anticipation is that there will be significant price increases due to CBAM, unless, of course, the CO2 emission is neutralized to a large extent during the production cycle. But otherwise, with even today's carbon emission prices applicable in the EU, we have calculated, and these are only estimates, of course, that over time, when CBAM comes into full force by 2034, you could see price increases just because of these measures of 36% and more when it comes to aluminum, for instance. That is quite significant, and that is not even factoring in the increase of CO2 emission right prices, which is indeed anticipated also by the OECD, prices of 150 euros per ton of CO2 emission are being prognosed. Well, we see today that we have in the EU a price of about 80 euros a ton, a bit over 80 euros. So that would mean almost twice as much as today. So that financial impact of this mechanism should not be underestimated by any company active, whether it's trading or manufacturing in these commodities. So, but indeed, we have a phased implementation, And let's have a closer look at the operational aspects, because of course this is a rather complex mechanism aimed at avoiding carbon leakage, as it is called. So meaning imposing CO2 emission rights on EU manufacturers and not on non-EU manufacturers will cause carbon leakage, essentially moving of production outside of the EU, which is then adversely impacted by this difference in, and I should not call it taxation, but in environmental levies. So there had to be a complex mechanism, and we can say it's complex, a complex mechanism to be put in place in order to allow this carbon leakage mechanism or anti-leakage mechanism to be effective and efficient. So, and what we can say, for those who are already familiar with global trade operations, is that it is very prone and very much linked to what you will see in the customs area. So, for instance, who will be the liable party, the responsible party for the reporting? That will be the declarant filing these declarations in the EU. Now, that is rather technical. You have two types of declarants in the EU: parties who declare the goods for importation themselves, and parties who have themselves represented by a customs agent to do so. If non-established parties decide to directly import into the EU, for instance, from Asia Pacific, under a DDP, delivery duty paid model, for instance, that is possible. However, already today, under the customs legislation, they will require an indirect customs representative to represent them in front of the customs authorities. That indirect representative will also become, in such case, the CBAM declarant, so the responsible party for all the CBAM requirements. Very important, because today we see in the market that a lot of these declarants, these customs agencies, are deliberating whether they still want to engage in such services or not, given the far-reaching implications that the CBAM reporting brings. So for any party under such a DDP model, it would be a relevant assessment to decide whether they are the declarant, and if so, whether their service provider is still willing to render that service going forward. There will be over time a requirement, and that is only as of 2026 to be clear, a requirement to become an authorized CBAM declarant. So not just anyone will be able to import CBAM subjected goods, and Likin has given a good overview of what these products and goods are. Not everyone will be able to import those kind of commodities into the EU anymore. You will need to apply for a registration, an authorization with the competent authority, depending on the member state where your representative or yourself in the EU are established. Non-EU importers, as I mentioned, will need to rely on the model of indirect representation in order to continue to import these commodities into the EU. And that indirect representative will then need to be an authorized CBAM declarant. So here you will see, and we estimate that the access to the EU market for these products in scope will be narrowed only to those parties who are in order with their administrative requirements. When we zoom in on the customs procedures that we know in the EU, we need to make very clear that the CBAM will only apply to goods which are subject to the legislation, of course, that are released for free circulation. So goods which will go in the EU under a bonded warehouse, transit regime, or inward processing relief for later on re-exportation will not be subjected to the levy. However, if your goods, and that is very often the case for steel, aluminum, and products alike, if they are put under an inward processing relief scheme, sort of a duty drawback scheme, then after that, a finished product made from those commodities is brought on the EU market. Also there, CBAM implications will apply. That is a very technical concept, but this is to be seen as an anti-avoidance measure, because otherwise putting goods under IPR for domestic further manufacturing would make it possible to evade, to avoid CBAM levies. That will not be the case. So for those who are using the IPR system to manufacture their goods within the EU, they will also need to prepare for CBAM if their goods, finished products, ultimately end up in the EU market. Also, the same applies for returned goods relief, where you will get a discount on the actual CO2 content which was emitted within the EU, because that has already been subject to our domestic ETS system. Same for outward processing, another customs regime which is foreseen in the CBAM legislation. If you apply this regime, you will get a discount on the volume of CO2 upon importation of the finished product which was manufactured, in this case in the Asia-Pacific region, with EU components. There are a number of exemptions and reductions foreseen in the legislation. And for that purpose, the origin of the goods, as origin is relevant for certain economic measures which apply in the EU and other measures alike, also for CBAM, origin of the goods will be an important concept. To be more precise, the non-preferential or economic origin will need to be determined, will need to be part of the data set that needs to be submitted, because the actual payment and the levy that will apply will be related to the origin of the product. As Likin already very well showed on the previous slides, there are differences in average CO2 emission for certain commodities across the globe. Also within the Asia-Pacific region, we see differences in average CO2 emission. CBAM, but less relevant for this context, will not apply to goods which originate from the EFTA countries, so the EU's neighboring countries, which we have close trade relationships. There will be a reduction foreseen under the CBAM legislation for the products that are imported, for which already in the domestic country of manufacturing, a emission right has been paid. So some examples have already been given, for instance, Singapore, China. If there is already emission that is subject to a local emission taxation or emission levy scheme, then you will not need to pay the full amount of CBAM certificates. Then you will get a reduction. Of course, to the requirement that you can demonstrate in the EU that those rights have effectively been paid in the country of production. Next slide, please. Yes. So, having explained the role of the import of the declarant, I should say, in the whole CBAM system, the declarant will have all the responsibilities towards the local competent authorities. It is useful to also have a look what is the obligation if you would not be the declarant, if you would just be the manufacturer or a trader selling to a EU party importing those goods in the EU. Now, those EU importers, they will need to gather import data. In first instance, for every quarter concerned, there will be 4 reports every year, so 1 per quarter, during the transitional period. Afterwards, as of 2026, that will be an annual reporting. That report will need to contain the quantities, typically expressed in volume, of CBAM goods imported into the EU. So they will need to have a full insight and a full overview of what they have been importing into the EU. They will need to assess the availability of production site information. That's a particular challenge when a trader is involved, of course, which does not necessarily want to disclose such information. They will need to gather that production site information. So what kind of a production installation is on place, what kind of a production technique is used for my particular commodity, and so on. And they will need to reach out effectively to their suppliers and the production sites for the very particular emission data. We will see that there is an option to use default values, but most of the time, and if you want to reduce your CBAM impact as much as possible, you will need to get actual emission data on both direct and indirect emissions, which were in place during the actual manufacturing of the imported goods. So that is quite a challenge, of course. Ultimately, these importers will need to allocate the emission data and prepare a full report. Where no data is available, they will need to complement it with default values, which are typically rather unfavorable values when it comes to the calculation of the actual levy. So those would be the very high values, typically for the 10% most polluting manufacturers within a jurisdiction. So what does all of this mean then when you are not the EU importer or declarant, so not directly impacted by CBAM? Even then, so as you can imagine, there will be impact. You will, first and for all, in view of all of the impact and the data that will be required from you, you will need to analyze the relevance of the EU market for your business. Is this an important market versus is this a less important market? And then together with what other markets like the US market and other markets are doing, you can build a CBAM strategy. Does it make sense to reduce our CO2 emissions? To what extent will we do? How much will we be covered by local emission rights that we already pay? And so on and so forth. You may, as an Asia-Pacific established company, analyze the possibility to alter your role in the supply chain. If you today are a declarant for CBAM purposes, maybe you can agree with your counterpart that you no longer will take that role given the introduction of CBAM, so that they take on all of those responsibilities and liabilities. As a manufacturer, but also as a trader, we've already seen, you will need to have a clear view on the emissions that are related to the products you manufacture or trade. As a manufacturer, you have a view on the manufacturing process and site, so that should be feasible. However, for traders, we do definitely see a challenge there. How will traders obtain that data and pass it on to the actual declarant? So that is an important question to tackle if you're in such a position. Now, ultimately, the goal is, of course, to be CBAM compliant. So in case of direct imports, as I already mentioned, you will need to liaise with your indirect customs representative to understand whether they would be willing to take up that CBAM role on your behalf or not. Because if not, either you will need to change your operational model, potentially establishing a company in the EU, or you will need to find a different service provider for that purpose. You will need to set up procedures to communicate promptly and efficiently with your counterparts in the supply chain, both downstream and upstream potentially, and ultimately putting in place a chain where all the relevant and necessary data, and we will come to what data that is, gets where it needs to be, being the declarant in the EU. In the longer term, is there a business case for diminishing emissions? And that relates, of course, to how relevant is that EU market for you? How will CBAM emission prices evolve? This could definitely, and we already see that with some companies, this could definitely be a competitive advantage or disadvantage. So given the impact on pricing, this is something in the long term, because there's, of course, long investment cycles involved. This could be a driver for change in view of the actual production. And that is ultimately also the goal of the EU Commission with this initiative, of course. Next slide, please. When we zoom in on the data, then indeed we see that during the transitional period, there are a number of data elements that already need to be submitted. And to be very clear, the transition period is already live as of the 1st of October of this year in the EU. So in that sense, the first report, because there's quarterly reporting, will need to be submitted with this data no later than end of January, or towards the end of January to be precise, of 2024. Not that long anymore. What data will need to be submitted? Well, the declarant will need to surrender the quantity of products that it imported, typically in terms of its weight, for electricity in terms of the capacity. So they will also need to report on direct, and for some commodities even indirect emissions. So the actual emissions embedded within that volume of steel or aluminum imported will need to be reported, together with the country of origin, where was it manufactured, even the data on the production side, which which may be sensitive data, of course, will need to be disclosed. And any carbon price already paid in the country of manufacturing can be disclosed as well if you want to work towards that ultimately as of 26 when the levy kicks in on that discount. So carbon price paid, and to capture that information is also quite relevant. On top of these basic data elements, there will be a number of additional data elements which are product specific. I will not go through all of them. They're quite complex and industry specific. However, I will give you the example of aluminum products, where next to the aforementioned parameters, you will also need to indicate how many scrap was used for producing 1 ton of the aluminum product. So the use of scrap rather than new aluminum is of relevance because, of course, also that has an environmental impact. The percentage of scrap that is pre-consumer scrap also needs to be indicated. And if the total content of other elements than aluminum used in the production exceeds 1% of the total volume, that needs to be reported as well. Not which elements have been added, but the overall percentage of alien elements added to the aluminum. So quite technical, quite detailed already, and not very easy if you do not have a direct view on the manufacturing process. So this will mean that certain companies will need to disclose information and have a look in, give others a look in their internal kitchen in order to be able to comply with the data requirements. To be seen, of course, how that evolves in the conversation between buyers and vendors. Next slide, please. Okay, by means of an example, here we will have a manufacturer somewhere in the Asia-Pacific region selling goods to, let's say, an EU importer who will act as a declarant, and the commodity involved are steel tubes. As we know, certain steel tubes are subject to also economic measures in the EU. Now also CBAM effectively will become applicable on steel tubes. Well, the manufacturer will need to be able to provide typically an HS code, but also the origin, quite importantly. They will need to disclose on top of that the actual production site, and they will need to disclose any carbon taxes paid, as we already saw. The trigger for CBAM to kick in will be the importation, release for free circulation in the EU, and the HS code declared on the customs declaration. And we've already seen there that certain commodities today, because brokers are effectively screening their products now and their historical data for CBAM impacts, we see there that certain commodities are being imported in the EU with the incorrect commodity code. And that means, of course, that CBAM may rightfully or unrightfully be avoided, but also to the contrary, some products are now in scope of CBAM, whereas they should not be. So it's very important, we already see today, to do a revision of the HS codes used for import. So the quarterly CBAM report, as we mentioned, will need to contain the quantity, megawatt hour for electricity, weight in tons for other goods, the installation and the country of origin I already mentioned. The indirect emissions maybe, that's important. So not only the emissions from the actual manufacturing process, but also what we call indirect emissions, for instance, emissions that took place for the production of the electricity used in the manufacturing plant will need to be taken into consideration. So there, fortunately, you can use certain default values, because otherwise you would also need to go to your electricity supplier in order to get that emission factor. Important to know, and that comes back to that communication process, the reporting declarant in the EU may request any producer or trader in Asia Pacific to use a certain electronic template which is made available by the EU Commission. So it is between parties, of course, to be agreed, also contractually possibly, and quite important to have CBAM provisions in your contracts going forward, but contractually foresee what will be the communication procedure, what is the frequency of communication of this data, and how will we communicate, so meaning which tools will we use for that. Next slide, please. So the calculation to be conducted by the actual importer or declarant based on the data provided by its suppliers will need to take place already for the first period of reporting now, but during the first year of implementation, importers will have a choice of reporting in 3 ways. First way being the full reporting according to the new methodologies embedded in the legislation. The second one being reporting based on equivalent third country national systems. So for those of you who have a national system in place and who already do have a reporting for your production, you could use that data to do the reporting in the EU as well. The third option would be reporting based on certain reference or default values, but that is only for the first year. So in the first year, it is a transition. You could opt for those 2 less intensive choices. However, if you want to get it right as of the first period of reporting and what you will need to do as a declarant going forward, the full reporting methodology is described under Annex 3 of the legislation and contains by itself a monitoring methodology which you can choose between. So either you use a calculation-based methodology, where there's again the differentiation between a standard or a mass balance method. You can use a measurement-based methodology, where you measure the actual CO2, or you can do a combination of the 2. For the sake of time, I will not go into the fullest of details on each of these methodologies. The slides will be provided, of course, but I think it's very relevant here, definitely also for those of you who will be acting as declarant, to dive into these rather technical calculation methodologies in order to see which data do you effectively have, and what do you need in order to apply one of these methodologies or the combination of them both. Next slide, please. Yes. So this legislation, of course, comes with its challenges, but also in view of effectively enforcing the legislation, bearing in mind that it is a gentle implementation with a rather long transition period, but there will be penalties as of day 1. So those penalties will apply in certain occasions. And where will that be? Well, where the reporting declarant fails to report anything. And it is rather easy, of course, for the authorities to uncover non-reported volumes, because it's all in the customs declaration anyway. So there we will see that those who just do nothing but are importing these type of commodities will probably fairly easily be identified and targeted with penalties. A bit more difficult for the authorities also will be the imposing penalties on parties, declarants, who fail to file correct reports. So again, in first instance, you can use default values. That's not a big problem. But after 1 year, you will see that the authorities will become more competent as well on this subject, and that they will become more stringent probably. They will conduct more verification. And you will see that at that occasion, if your reporting is not solid, you will be potential subject to penalties. What is the relevance of those penalties? Well, today between 10 and 50 euros per ton of unreported emissions. So that is quite significant if you ask me, if you know that the current ETS prices in the EU are about 80, a bit more than 80 euros. So that's a significant addition to the cost of importation into the EU. So this is clearly an incentive as well to be compliant with the CBAM legislation as of the first moment. Just to conclude on this one, 10 to 50 euros, but of course, those who perpetrate more than once can be subject to even higher penalties. To the other side, if you are acting in good faith and you could not get the data for whatever reason, and for that purpose your reporting is incorrect, there you would be subject to lower penalties. Next slide, please. Yes, thank you. So very briefly, the key requirements for the full implementation of CBAM. Well, there will need to be, as I already mentioned, an authorized declarant. No authorized declarant, no possibility to import into the EU anymore. So someone will need to take that responsibility. And that authorization will need to cover the imported goods. So not just for anything, you will need to pinpoint which goods. That part, they will need to submit CBAM declarations as today already, and they will need to buy, sell, and surrender CBAM certificates, so the effective payment mechanism. The CBAM declarations going forward as of the full implementation phase will cover a full calendar year and will need to be submitted each time by the 31st of May of the following year. Key information will again be the imported goods and the embedded direct and indirect emissions, just as with the current reporting period. There will need to be, and that is important, an independent verification of this data as of 2026, meaning that an independent auditor will either need to audit that data at the side of the declarant importer, or a manufacturer can also choose to have its manufacturing site verified and the data related to that site verified altogether, which is quite efficient. If you are selling to multiple EU parties, then the verification, of course, only needs to take place once. Third country installations can include emissions information in the CBAM registry. So there will be a CBAM registry where you have your foreign emission rights that you already surrendered included, so you can get that discount effectively. Last few words on the CBAM certificates. Those prices will follow the EU ETS certificates, so about 80 euros today, but the anticipation is that these will go up, given the market conditions, but also the aim expressed by OECD to have them at about 150 euros. You can purchase them from appointed EU authorities, and they will only be valid for 2 years after purchase. Very different to the ETS certificates, you cannot trade with them. So there's not going to be a trading mechanism to avoid speculation on these certificates. You need to have a certain volume of certificates at hand at all times, at least covering 80% of the embedded emissions for the goods imported at that time. So if a ship of steel comes in, you need to make sure that within that quarter, at least 80% of the volume you imported is already covered through the purchase of CBAM certificates. You surrender the certificates on an annual basis, and the remaining CBAM certificates, yet be it within a certain limitation, can be resold to the authorities upon request, but not traded on a general CBAM commodity market. With those words, I hope I have been able to give you a bit of insight on the technicalities of CBAM, and effectively you will have seen that it is a very technical piece of legislation. But let's also have a look at the implications and, of course, how Deloitte can serve you. Thank you.
Thank you, Dan, for the very comprehensive introduction. I think all the audience will have the feeling that the rule itself is very complicated. So this brings us to the second polling question of the day. So the question is, what do you consider be the most challenging aspect of CBAM for your organization once the CBAM is fully implemented? We have 5 options available, and please select all that options apply. You will need to hold down your shift lock or control keys to select if you wanted to select more than one answers. So while we are waiting for the result to come in, Li Qing, maybe I have a question for you, and this is one of the very frequently asked question. Is many clients will ask, so what if they've already paid a CO2 price in the country of production?
Thank you, Dolly. In case that a European importer has already paid any type of carbon price in the country of origin, and for example, if it is a carbon tax or the participation in a national ETS or any other local carbon pricing mechanism, it will be taken into account for the calculation of the final CBAM levy. Consequently, the higher the local carbon price paid in the country from which the imported goods originate, the lower will be the applied CBAM cost for the European importer. However, if no carbon pricing scheme is in place in the country of origin, then the full CBAM levy will have to be paid by the European Commission, by the European Union importer.
Thank you, Li Qing, for the answer. So let's take a look at the result. Okay, so I think, yeah, so many people have saying that managing the data is the most challenging part in cope with CBAM, while the level 2 scoring are related to the associated cost with the embedded carbon emission and how to define the process and procedures, and of course how to obtain more information from the supply chain counterpart is also a challenge. Then the next one will be appointing a third parties. Okay, so I think with that in mind, let's move to the next slide. So I will quickly talk around some operational aspects. In order to cope with the CBAM, I think for the organizational role, the personnel and the position within the CBAM would have an impact, different impact. So as we can see in the organization, tax managers who are more focused on the calculation and reporting mechanism, and those who are responsible for the sustainability would need to identify the key segment that are willing to pay for the sustainability and factor it into the pricing strategy. While the finance professionals need to develop pricing strategy that include the impact of CBAM. Supply chain managers would assess the supplier landscape and engage with supplier in order to minimize the carbon footprint. So our suggestion is think about your role and where you fit into the CBAM impact. Okay, so let's move to the next slides. So very quickly to share some key compliance measures that should be aware of and planned for the full implementation of the CBAM approaches. The key consideration and challenge would include assign the responsibility. So you need to determine which department within your organization will take the responsibility of handling the CBAM compliance. And this would involve creating a new function or department. You will also need to think about the customs representative, as Dan have said, whether you will continue to use the current one or change one who are more familiar with the CBAM compliance requirement. Data management, it has been the most challenging part, so it's crucial to establish a robust data capture process within the organization to maintain accurate and up-to-date data. And also, it's important to have the right calculation method to understand the different calculation required for CBAM reporting and also have them documented. But last but not least, although there are many challenges and tips for company to cope with, do not view CBAM as a burden, but rather as an opportunity, because CBAM reports would provide data on your carbon dioxide emission and your position relatively to others in the market. This data can be used for optimizing and invest strategies, and potentially would give your company a competitive advantage in the EU market. Okay, so let's move to the next slide. This is the part discuss how the data quality dashboards can potentially help your strategy approach. Having access to accurate and real-time data is crucial in this evolving landscape. Data quality dashboards can help you to track and manage your emissions, access your carbon footprint, and identify areas for improvement. They can provide transparency in your sustainability efforts and enable you to communicate your green credentials to your customers effectively. Data quality dashboard can also help you to make informed decisions about which decarbonization projects to prioritize, evaluate the economic and technical value of your products, and determine the green premium you can command in the market. In summary, as you navigate the complexity of the CBAM regulation, consider it not only a compliance challenge, but also an opportunity to optimize your operations and to reduce your carbon footprint. By leveraging the data quality dashboard and understand the components of value, you can turn the CBAM into a competitive advantage and play a proactive role in the transition to a low carbon economy. So I'll move to Li Qing to share how Deloitte can help.
Thank you, Dolly. We have provided various perspectives on what CBAM is and how to address it, covering both the operational and the strategic considerations. We have also discussed its impact on Asia-Pacific business. So now let's take a look at how Deloitte can assist. Next slide, please. We can help you with a range of actions to prepare for the full implementation of CBAM. For a business potentially impacted by CBAM, the first thing to do is to analyze its product portfolio and supply chain. In the past 1 year, we have been approached by many clients in different sectors who are very curious about the impact, and they wanted to know whether their products are in scope or not. When we help our clients look into their product portfolio, like Dan mentioned just now, we need to revisit their customers' classification of the products. And in some cases, it's possible that if they change the product they export, for example, a client who was exporting steel pipes used in manufacturing charging piles, and because they also export other components of charging piles, they finally decided not to export the steel pipes separately. Instead, they assemble the charging piles, and they export the charging piles because charging piles are considered as machinery. So it's not in the scope of CBAM, while the steel pipes are CBAM products. So it's interesting that you visit your product portfolio and your supply chain. And if it is confirmed that your products are impacted by CBAM, then you also need to perform a business impact assessment. So we help our clients examine the operational, financial, and organizational implications. We noticed that in some businesses, different functions have all been studying the impact of CBAM. For example, the finance team, the tax team, the procurement, and the supply chain team. However, there is not an established process or designated team to handle the CBAM compliance work. So we help in providing CBAM training to clients and help them set up working process and operational manual for CBAM compliance purpose. This has also proved to be of benefit, especially when our clients are required by their EU customers to respond to biddings, because the customers ask them to demonstrate their readiness to handle CBAM compliance when answering the bidding. The immediate need for manufacturers of CBAM goods in Asia Pacific is to collect the emission data according to the CBAM rules. We noticed that some clients, they have very solid carbon footprint monitoring and recording capabilities, but they are not familiar with the CBAM data requirements. So we can work closely with these clients to set up a data collection process to get the data from procurement to production and compile the data in accordance with the CBAM reporting obligations. If the precursors of your products are also covered under CBAM, we can also assist you in collecting data from your vendors of the precursors. Reporting is critical and time sensitive. So especially during the transitional period. So following the transitional period, there will be other considerations such as the settling dues and the optimizing operations. So we offer comprehensive support utilizing our multidisciplinary approach across various areas to help you manage CBAM effectively. Next slide, please. I would also like to take a moment to introduce our CBAM Compliance Manager tool, which is being developed by our Center of Excellence in Europe, led by our Dutch and Belgian colleagues. This is a digital solution designed to help companies automate their CBAM reporting obligations. It functions as a record-to-report cycle solution, helping collect necessary information from your ERP system, from your customs management system, or other relevant systems, and then interface with the report creation. You can generate reports regularly or as needed, and the tool handles data collection and data allocation to ensure compliance, including creating dashboards and specific reports for authorities. I won't go into much detail here, but we would like to know if you are interested in seeing a demo of this tool. Yeah, we can arrange a separate webinar or a one-on-one discussion. Yeah, please let us know through the feedback questionnaire or email communication. Okay, so we finished the contents of this webinar.
Thank you, Li Qing and Dan. I think that brings us to the end of today's discussion. Although we are used up the time, but we do receive many questions. So let's pick up 2 questions to answer. The first one question is fertilizer included in the transitional period? So the answer is yes, because fertilizer is one of the first batch. And for those companies who are not familiar with which products are covered, you can take a look at the Deloitte trade alert, or the EU Commission also published the HS code covering those products who are subject to the CBAM. Okay, so the next question is a little bit long, but it's also very typical. So the question coming from the audience is: their main products are telecommunication and consumer electricity products, which are clearly not subject to the CBAM. But for some of the products, such as the spare parts, screws, the HS code fall under the CBAM list. But the shipment is relevantly a small part, and it's not a major product for the import into the EU. So the question to Deloitte is: for telecommunication company or IT company, do they also have to declare the carbon emission and to follow the CBAM mechanism? So maybe I defer the question to you, Li Qing.
Yes, this is an interesting question. Yeah, when I read the CBAM regulation, I noticed there is one article saying that if the import value is below 150 euro, then the regulation does not apply. So if the intrinsic value of the import is below this value, 150 euro, I don't think there is a reporting obligation. And maybe I ask Dan to confirm whether my understanding is correct.
That understanding is indeed correct, but I would like to add one more thing. With the UCC reform package, that de minimis threshold will be abolished if that piece of legislation comes through in 2028. So for now, not in scope. Over time, probably in scope.
Okay. Thank you, Dan
So
and Li Qing.
over time, it will be useful. Mhm.
Yeah, so I think it's worthwhile that even if your products may under the de minimis now, but it's worthwhile to take a look at how the CBAM is developed. Okay, so I think that's all the time we have for today. Dan and Li Qing, thank you very much for your time. And also, especially thanks to all of you who were able to join us. We would like to encourage you to fill out the short survey that will pop out on your screen after this event. This will tell us how you think about today's program. And if you join us late, please know that this presentation will be archived for future viewing. If you feel that others in your organization would benefit from this webcast, please share the webcast via the share this icon or have them visit the debrief website. And for those whose questions are not answered in today's session, we will respond to all these questions submitted during the webcast in a couple of weeks. Also, if you think of any other questions or comments later, please feel free to reach out either to me or to our speakers. We will be more than happy to talk to you and including share with you the demo if needed. Please do not forget to turn in our next scheduled webcast, which is from the financial service industry on the 14th of November, titled Investment Management Update, Tax Development in Asia Pacific. Lastly, from all of us at Deloitte, thank you very much for your participation in Deloitte's Asia Pacific Tax webcast today. Thank you and have a good day. Bye bye.